I'm Darwin Green, CEO of High Gold Mining. We are a venture-listed junior exploration company trading under the ticker symbol HIGH on the TSX Venture. We are focused on high-grade gold in North America. Our flagship asset is the Johnson Tract project in Alaska, where we have a high-grade resource that we're expanding. We also have a very large portfolio of gold properties in the Timmins Camp, Ontario, that we've been consolidating, and we're just getting after right now.
Well, Darwin, thanks for joining us. You're over in London at the One-to-One show. Why are you here?
Well, talk to investors.
Have you got a lot of European investors over here? Or?
We have some, for sure.
Right,
okay. We by and large, majority of our investors are North American based. We have, good US funds and Canadian funds, but we do certainly have some European investors. We're meeting with some of them in Germany last week, and hopefully more in the coming days here.
What's the news in Germany? People are excited about gold again?
It's starting to. The last little uptick here in the last couple of weeks has certainly given people hope. I think the fundamentals are there. Inflation seems to be wanting to run away.
Right.
So we'll see. We've heard it before. So
we have. I think next year's looking good. A lot of people talking about the fact that I think brokers and the like are going to be pushing gold as the story. So a quiet 2021, that's for sure. Anyway, look, first time we've met and spoken, so I'm pleased you came on board. We've been after you for a long time. That's for sure.
That's great to hear.
Yeah, no, it's fantastic. Look, giving us a news story, I'm just trying to understand, how this thing came to be. So I'd like to understand the business plan that you set out with. But first of all, tell us about yourself. What's your background, track record, and relevance to what you're doing?
Yeah, okay. Well, I'm a technical guy, and I think our team we pride ourselves on our technical strength and the depth of our bench, so to speak. I've got a lot of history in Alaska in particular.
Okay.
I was VP exploration for a couple of companies, one called Niblack Mining, where we permitted and put in an underground development program. More recently, I was with a company called Constantine Metals. That's actually where I did my master's thesis, that contributed to a discovery there. Where we got about, we developed about a 14 million ton high-grade copper zinc VMS deposit, brought in a Japanese smelting company as a partner. And really that was where High Gold was born out of. We were spun out of, we took the gold as that project was advancing through PEA and a development trajectory. We took the gold assets from Constantine, spun them out 2 years ago to create High Gold.
Right. You say that, it seems to be polymetallic reporting all the way through the PowerPoint here.
True. But gold dominant for sure.
Right, okay. So let's talk about the plan. 2 years ago, you spun out of Constantine, great. What did you think that you could do? How much did that cost you? Let's talk about the beginnings.
So, what we saw, essentially the catalyst for us spinning out the company was we'd always had a nice portfolio in Timmins, pure gold portfolio there, but we did have a project, an asset was brought to Constantine called the Johnson Tract. It was brought to us by CIRI. It's an Alaska Native corporation. Really neat history of Alaska Native claim settlement. So actually this year is the 50-year anniversary of it. They approached us. They're relationship driven, and we felt very privileged for the opportunity then to take this Johnson Tract on, and we raised about $7.5 million out of the gates on that initial IPO, which was September 2019. And then, we've done successive rounds of financing. We just closed just under, 19 million. Here.
So they're a big shareholder, presumably?
CIRI, no.
So what's the deal structure look like?
Yeah, it's a lease. It's a mining lease where there's certain royalties that would flow to them, but they also have a back-in rate. It's at a one-time election and a production decision. And it's great. It's a great thing to have. So they would fund their program.
Why do you say that? If I'm a shareholder or thinking of investing, if someone's got a back-in right, that's more of a problem than a benefit, isn't it?
Well, in this case, they would fund their pro rata share of mine build, and they would obviously get their pro rata share of proceeds from a future mine. The reason why we like it so much is there's a lot to feel good about it. They are. It is a native corporation. The structure is that the shareholders to that corporation are the indigenous people that live in the surrounding region. So then that your revenue from the project is flowing directly to the locals, there's a lot to like about that.
There is a lot to like it, especially in, I think today we've seen so many stories in this year where people are pushing the ESG agenda and people are talking about these social responsibilities that companies need to have. But you guys also need to clean up your act. So I think that is it is a benefit of you. look at it like
I
that.
think so. I think, there's much broader political support in a scenario like this. I mean, Alaska's got a real advantage, in my view, over a lot of places, around the world, in that they did settle the native land claims. And it was a very visionary and progressive model that they developed and kind of created from scratch, Alaska-made solution, and they created these corporate entities. There's regional corporate entities, which there's 12, and then there's village corporate entities. And it's been a proven business model that's been successful. And, Teck, the Red Dog mine, one of the largest zinc mines in the world, it's on Native Corp lands. It's been about $2 billion of revenue generated from that that's flown out to basically every Indigenous Alaskan, in that they actually share the revenue. So with the group we're dealing with, which is called CIRI, or Cook Inlet Region, Inc., we've done the deal with them. The structure is 30% of the revenue flows to them, and the remaining 70 is split amongst all 12 corporations. And they dividend cash out to the shareholders. So it's really cool. And, other examples, Donlin is on Native Corp lands, Arctic Ambler system with South 32 and Trilogy. So certainly the senior producers of the world are very comfortable with the setup.
Yeah, fantastic. Okay, well, maybe a discussion for another time, because that would be fascinating to see how they came together. Well, yeah, as you probably should. I think there's a lot of companies trying to implement a scenario like that, or trying to come up with a scenario which could sound like that, but they're not there. That's been there right from the start for you guys. Let's talk about what you managed to do with that $7 million, because you just raised just under $19 million recently. Okay. You don't get to do that unless you have gone through a process or delivering a strategy which gives people comfort in the way that you're going about this. So $7 million, what did you do with that 2 years ago? And how did you get to where you are today?
Yeah. So our objective, there was historic work done on the property.
Yeah.
It was discovered in the 80s by a senior mining company. And then actually a mid-tier was looking at developing it. They're actually looking at direct shipping the ore to by barge to one of their other operations. But then it sat idle for 25, 30 years. Right. So our first objective was to understand what we have, quantify what we have as a starting point. So we completed a drill program in 2019 that validated the historic work and allowed us to establish a resource estimate.
How do you do it before you get it, before you commit? Because we see so many retread stories out there, and retail investors get fooled into sucking in money into a project which didn't work the previous 4 times, but now it is, apparently. So how do you determine as a management team whether it's going to be good enough for you to raise money and start a process where you think you can genuinely move down the track, so it's not some sort of lifestyle company?
Yeah. Well, for starters, there's 2 things. One is it's a sizable land package, and it had multiple other prospects that all were identified in the first wave of reconnaissance work that led to the discovery of the main deposit, but had virtually no work done on them since. So I like that sort of untapped exploration upside. I'm an explorationist at heart, and you fly across to see big gossams, it gets you excited. The other side was just the tenor and nature of the mineralization that had been found. There's multiple 75 to 100 meters plus type intersections of better than 10 grams per ton gold with base metal credits. Very simplistic philosophy. You don't usually get that kind of mineralization in isolation. It's tied to bigger systems. And you could tell looking at the data that it needed more exploration. And what shocked me is that it's like I had never heard of it. I've worked in Alaska for 20 plus years, and I hadn't actually heard of the asset before it was brought to us. A little embarrassing, but there are things that are just under the radar, and it certainly missed several cycles of exploration. A project of this quality would have normally had more exploration work prior to us coming to it. But yeah, so that, those are the elements that got us excited about it. Certainly, we had a senior producer who participated in our Go Public financing. And that senior producer, actually, we were trying to find a JV partner on our Ontario projects. And they said, well, can we look at that one?
Is this who you're talking about?
I can't talk about it. 9.9%. So they're big. They produce gold.
Tantalizingly close.
North American based.
Right. Okay.
Fantastic.
With a big balance sheet. How big is their balance sheet?
Big. Yeah.
Big.
Yeah.
Okay.
Yeah.
And they're with you for the ride.
Well, yeah. They have an investor rights agreement that allows them to maintain up to 9.9% right now. Thus far, they've been maintaining that. They cut a check for $5 million on our last financing. They're great folks to work with. They're tracking the project. It certainly helped reduce our cost of capital, I think, when you have someone like that.
But they're kind of Timmins focused, or that side of the capital.
No. went to them looking for a JV partner out there. And they
Right.
said, hey, can we look at this Alaskan thing?
Okay.
We didn't actually have the data ready to look at the time. We were just getting our heads around it ourselves. They spent some time looking at the data and then participated. It wasn't a big check because
Yeah.
our valuation was quite small when we went
Right.
public. But they obviously were comfortable with what they saw. And more than anything, I mean, I can tell you, hey, man, I think there's huge potential. This can be a multi-million ounce system.
I kind of hear that a lot.
Yeah. You might believe it a little more if
Yeah.
a senior is willing to write a check.
Exactly.
It's, there's no guarantee. The drills have to find the ore, and but it's in our view, it's a place that's worth looking and exploring, and we've had some success. And more recently, the last year and a half, we've been drilling on the main deposit. We got the resource out. We progressively expanded that resource area with step outs. This year was the first year we actually drilled at any of the other outlying prospects.
Right.
So we're 4 kilometers away, drilled 6.4 meters of over 500 grams per ton gold with really nice silver as well. And it was a nice validation that this property has potential to host other deposits. And it was a good validation for us of what we've been telling the market.
Yeah.
And certainly the market rewarded us.
So how do you come at this? Because I appreciate that you've gone and done some grunt work, identified something that you weren't aware of previously, and said, right, okay, I think there's something here. We'll spend this amount of money, and then I've got to go and raise some more capital. This strategic partner, this industry player, are they gold focused? That's their thing, gold. Okay. They're going to want you to behave a certain way. They're going to want you to, provide specific information which is relevant to them. The market's going to want a different type of information, and you got to get that balance right.
Yeah, well, I think when it's a 9.9% holder, it's a little different. It's not a JV partnership.
Right.
It's an investment. We keep them abreast of what we do.
Right.
They're not dictating.
So not on the
how we're spending
board
dollars.
with 9.9.
No, there's nobody on the board right now.
Got it. Okay, so they're not driving your strategy. So your strategy, just be really, really clear, is what you've raised nearest now at $19 million recently. What do you do with that? What's the picture you're trying to paint for the market?
Yeah, I mean, it's quite simple. We want to get that project to establish critical mass. Two things. I'll back up a little bit.
Yeah.
Our business plan is we think we have the makings of the ideal mineral deposit. It's got both grade and thickness. It's a really rare combination to get that. That generally leads to attractive economics in that you have the ability to mine a lower. I mean, most 10-gram type systems are 1, 2, 3 meters wide. The core of our deposit is 30, 40, in some cases better than 50 meters true width. That's really attractive from a mineability standpoint. As we're stepping out, we're not hitting quite those same widths, but it's a great start. So. But what it wants to be is larger. Right now, it's just, if you combine indicated and inferred, you're just total global gold equivalent endowment is just under 900,000 ounces. Our objective is to make that larger. I don't have a magic number of what that is to tip the scale and say, hey, this is for sure mine, but we feel we're not far away. So our objective is to establish scale. We also think there's high odds of another deposit or two to be found. And so then you can establish scale that way as well. And what we found to date, on the ideal mineral deposit, we also think it's the type that you can permit and build. They're high grade underground mines or smaller footprint. They're lower capex. You put a lot of your waste material back under the ground. So it makes them a more attractive.
So let's talk about how that breaks down, because there's a lot of options that are available to you. So it used to be the case, get 1 million ounces, main resource or resource, people go, job done, we'll move on. The language I've been hearing the last couple of years is that number needs to be 2 million now, just to make it interesting, not just to industry players who might step in or strategic who might step in, but also to the market, because there's so many gold projects out there, right? With high grade, and with an underground component, so does that change or shape your thinking about what you would need to announce to the market before you put a stake in the sand with some kind of study around it?
Yeah, I mean, it obviously impacts things. I mean, it all comes down to margin, whether it's a 0.5 gram system or a 20 gram system. Your mining cost tied to your grade, it's about margin. We think it's a project that should lend itself to being higher margin, but also lower capex, because you have about 15 miles of road you need to build. Not nothing, but it's in the grand scheme of mining project, that's a very
Right.
modest amount of road construction. What is interesting on this project, there's very much a path A and a path B. Path A for us, absolutely what we're committed to trying to do here is find enough to support a standalone mining operation on site. What was looked at historically was a direct shipment scenario
with one asset, not these satellites.
Yeah. I mean, with the satellites, they're all going to fit into one common thing.
They will,
because they're close enough.
They are close enough. Okay, right. So that's where it's going.
4 kilometers. But it's modest road building. It's a doable thing for sure.
Okay.
But what was looked at, in the past was shipping to a place that had a mill that produced concentrates on the coast, and there are others of those out there. That's kind of your backup plan. Where given the amount we've already found and the grades that we're seeing, it's. You think that's quite a plausible scenario already. We're not, but we're focused on adding the scale right now.
Okay. You're focused on adding the scale now. So is that B or A? I can't remember which.
Yeah, I can't remember.
So let's say, but there is a scenario where because again we talk to miners from all around the world and operators from all around the world, right? And the Aussies, whether they're in West Africa or Australia, they just love to get into production, especially with the high grade stuff, because it gets the cash flowing, it reduces dilution for shareholders. They like that component, but it also allows them to build up capital for their exploration program. That's a model which works over there. I've seen a couple of Canadians looking at trying to do the same thing. You've got that option available to you.
You do, yeah. No, I mean, and we've spoken to Australians here. Why aren't you doing this? That's kind of it. There definitely is two different camps. On that. One is build as much value as you can before getting bogged down with all the permitting and everything else that it takes and the capital raised to build something. For me, you want to make sure you've got kind of the nuts of the opportunity before you make whatever decision you make, because you can be one drill hole away and all of a sudden the kind of makeup of that project changes dramatically.
Right.
So
you want to get comfortable with what you understand about what's going on underground. Because when I go back to the model of let's get into production early, I've seen people do it with 400,000 ounces, right? Mm-hmm. Yeah, but it's 10 grams a ton.
Yeah,
it's a different from Greenstone Company isn't going to do that, right?
Yeah, well, it depends where you are too. We think we're very well located for Alaska. There's workforce across the inlet. There's a lot of good things, but it's not as good as Timmins. You can find 250,000 ounces in Timmins, and you're 20 miles down the road to a toll mill, right? So there's a lot of variables that play into it, right?
Right. Okay. So, given this, we're just doing an introductory chat today because I was intrigued by the story. I've been wanting you. In a way, it's good that you're coming to talk to me now and not when we first started chasing you, because it's really moved on considerably. So you've got the cash now, whatever it is, $25 million bucks,
something. 26, something.
Okay.
Today.
Market cap 100 million. Share prices. You went shooting up, come back a little bit. I think precious metals had a little bit of a struggle this year. Next year, based on what the options available to you, what should we be talking about this time next year?
Yeah, no, it's a good question. I mean, one of the challenges right now is assay backlogs 3-4 months behind for everything. Yeah. So plans for next year are always going to be designed after you get results back.
Right.
So we won't lay out the formal budget for next year until we have those back, which is everything's not going to be back till January. But what you can expect next year, between now and say the end of January, we have a lot more results to come back from this season's program that just shut down. We have some metallurgy that we're doing, and we also have a resource estimate that will be updated. Probably it'll come out, I would guess, April, thinking of when we get the assays in.
Yeah. And
then I anticipate we'd come back with a more aggressive program next year, particularly because we have this new discovery at Difficult Creek. I mean, there was mineralization known there before, but certainly not at the tenor that we've identified. So
it's kind of funny, actually. People are lucky to make discoveries, right? There's people say, "Oh, we've got targets, we've got anomalies." Not many people come back and go, "Oh, we made a discovery." It's actually harder than people realize, right?
Tough in its business,
right?
For sure.
But bizarrely, this year, still 21. People weren't getting credit for that.
No, they weren't. It's interesting. I mean, this whole I'm referring to at Difficult Creek or DC prospect. It's probably one of the best. We've drilled 100 meters of 12 grams gold, 75 meters of 18 grams of gold on a gram meter thickness product, this one at DC was better. It was plus 3,000 metal factor. It was
You take that.
500 plus gram, 578 grams, I think, over 6.4 meters. Most of it came from 2 samples. The rest was 2 and
I'd
1
be like,
grams.
happy Christmas. That was good.
Yeah, but I'm looking at it. I'm looking at it and going, I for the last 2 months, I'd seen guys that had great news releases where they traded down. It was a liquidity event. So it was weird where I'm going, I'm not sure what the market's going to do. I mean, it should shoot up, but you don't know. And it was nice to get that reward. It was nice that the market, it was probably in part because we had primed the market on that target. We said, hey, we want to go out here. And so there's a little bit of preparation or understanding. And part of it, I think, it was a damn good intersection, right? So, I think it really bolsters the story. I mean, you've got this one deposit that's growing. Now you've got another area, and it speaks to a system. And, those are good places to be exploring and finding more. Odds are you're going to find more, right? So.
Odds are. So next year, drill.
Yeah.
Well, you'll lay out your plan at some point in Q1-ish. But drill. And then we'll work out what it is that you've got.
Yeah, well, that's the big question. We're going to do a resource at the end. So we're doing a resource come April of 2022.
Right.
So that's the next milestone of kind of take stock of what we've done for the last 2 years of drilling and then go, okay, based on what we're seeing, my expectation is that we want to keep adding scale because PEAs, in my experience, do very little for your market cap unless the market doesn't understand your project, right? Like unless they don't have and for us, for example, one of the things we're doing this year is metallurgy. It is polymetallic. So we quote a gold equivalent number. 50% of that value is gold and the remaining 50% split between zinc, copper, lead, and silver. There's historic metallurgy that's been done by both Anaconda Mining, which were one of the biggest copper houses back in the day, and the other mid-tier producer. That was good. Gave good recoveries. There's no nasties. It was straightforward, conventional flow sheet type thing, but it behooves us to, which is a prudent thing to do, to get more current metallurgy, because I think what the market needs to understand and what we feel is highly probable based on the historic data is that it is really straightforward and it's not complicated. Because investors are always looking for an excuse to find a flaw. You know what I mean?
I do. I want to kind of keep it short and sweet for now because I want to introduce you to the world because it's a good story. But just in terms of the share registry, obviously you got your strategic 9.9. You're also sitting on 35% of institutional money, which again for a company your size is unusual. So why has that come to be?
Oh, we're great. No,
is it about you again?
I mean, I think it's a combination of factors. I mean, I think it's a combination of team and asset, always is, right? And our team is, we've got a very sound technical team. Our VP exploration, he runs our technical side, Ian Cunningham Dunlop. He's got a tremendous amount of experience in business. Was involved with Marco Day's group of companies.
Got you. Yeah. There we go. That's what I was about to say. But you got to know someone.
Yeah,
so here's the guy.
Our board as well.
Okay.
Mike Cinnamon, CFO for B2 Gold. Michael Gray was one of the, is a very well-respected analyst who it's the only directorship he's taking. He's now with a boutique group called Agentis, but formerly with Macquarie. And I think the balance of that team, in my view, helps build the confidence because, I'm lesser known, to be honest. I mean, I was a VPX before doing this. But I've got conviction in what we're doing. And I think that counts and carries. And, we feel very privileged to have the shareholder registry that we do have. Some very good U.S. funds, Canadian funds. And then there's some individual investors, Rob Kewen and John Robbins and others.
Yeah. So it was impressive. I just wondered what was kind of the common glue there, but I guess that explains it. Like I say, thanks very much. And we're all short of time because we've kind of got this conference thing going on and running around meeting people. Appreciate you coming on. It's been far too long. We'll see you again maybe in the new year. We can maybe have a proper run through the story.
I didn't even touch on Ontario. We're drilling right now. So next time.
We got to leave something for the clamoring audience.
The flashy gold samples and just sit on the camera.
Actually, we do accept gold. Okay, Darren, lovely to meet you, mate. Thanks very much.
Pleasure.
Cheers.
Okay.